Hello, good morning, good morning. So with the current events that's happening in the US right now, possible escalations going on between US and Iran, I will be looking still for some buy opportunities. So I'm waiting for like some kind of a bullish candle closure. I think what would be nice to see is if price first comes down, creates a support, then breaks the highs. But if it breaks right now, I'm not so keen on it. I would rather wait for at least one candle here to close bullish. And I'm going to see how it closes as well. About 20 seconds for this candle here to close. I hope this candle doesn't break. All right, so I'm going to get in if it breaks the highs over here. Got some nice clean range on the left-hand side too. I'm probably going to wait. Actually, I'm going to wait. I'm going to wait a bit longer because that's kind of looking a little choppy to me. So I would prefer if we can get at least a bearish closure first. Yeah, that isn't so clean to me. I'll wait for at least some kind of a bearish closure first and then get the trade. Man, if it goes, it goes. It would be nice to get a strong bearish closure. Let's see here in about 2 minutes. I mean, yeah, we just got a closure here. So I'll be looking for a buy now at this point. Just some kind of a low volume. Yeah, I think that'll look a little bit better. Yeah, I still don't mind like if it comes down a bit more, that's also really good. Create a bit more PA before fully committing. It's struggling with the buys for some reason today. I actually expected a little bit more bullishness, a little bit more clean PA. We did get the breakouts during pre-London though. Sorry, during the Asia we did get some movement to the upside. Really good movement with the daily candlestick. Just went straight up like we spoke about over there. Straight up, no bottom wick. Yeah, this would be good. Like come down, close. Yeah, 5 minutes struggling a little bit over here. See those rejection wicks. Well, we got above the 8 SMA. So wondering if that 8 SMA could actually hold it up a bit more. Yeah, so now we just gotta wait. Candle is closing. All right, let's see if we get the break. London volume is coming in. Got London money coming in. A little bit volatility. New hourly candlestick just created the hourly lows. Be perfect if this candle here closes bullish as well. So coming down to retest possibly 51.35. 5 minutes rejecting that area. That's why I'm waiting for a break above that 5 high. If we break this 5 high, we should move up. If it doesn't move up, it's most likely going to pull down aggressively, and that's just going to leave a liquidity grab above this area. But we should be breaking it to move up, not to liquidity grab. But I'm going to wait and see if we can at least respect the lows by 51.35. Alright, so it looks like it's still pushing down. Quite interesting, the type of volume we're getting today, because we should actually still be moving up, you know. We're up now 0.69%. Should be, generally speaking, moving up. Unless it's trying to gather some more orders over here. But macro fundamentally, we should be on the way up. Man, this thing's just pushing, jeez. Alright, that's still alright. I still respect this area here, create a support. Hey, good morning, guys. Yeah, so that was the market open play right over here. Remember from yesterday's simulation? What we spoke about, but you see there's a market open over here. And price shot up. No bottom wick. Just broke the highs and then continued to move to the upside. Really nice distribution. See how beautiful that distribution is? But it's quite interesting. Like since then, the market's been somewhat choppy. Still got some nice ranges from here to there, here and there. But yeah, overall still kind of a little bit choppy here today. Yeah, it's coming down. Might have to wait for it to create some PA. Some fresh new PA now. Yeah, back to waiting. So you got Architect. Hey, welcome. Architect in the chat today. I think the bounce doesn't happen up until maybe we tap 51.16. It could be breaking into this much larger consolidation here. Really coming down, retest this zone, and then come back up. Because we were looking for like a V-shaped reversal, right, on the 5 minute, but instead it gave like a few rejection wicks. Nice time to break the lows. So you got rejection. Some reason here, buyers really struggling. But daily is above our key market by 5100. See, it's like a small little shotgun play off the daily time frame over there. See how this 1 minute here is cooking up. I don't know if like still looking for buy, maybe 51.39, depending on how we start to break. But as of right now, I think the best thing to do is just to wait for a little bit more structure to build. But yeah, this is the daily time frame right now. We got the daily candlestick. Close above 5100. And now we're expecting price to keep moving up bullish. All-time highs. So let's see what kind of week it's going to be. It could mop up this range slowly, or it could do it with loads of volume. Depends on what sort of event happens in the news, right? So Trump gave around 10 to 15 days. But you know, knowing Trump, probably going to strike sooner. So might be kind of be on our toes this week, especially because Trump is due to speak, I think, on Thursday as well. We got a red folder of Trump speaking. So that's going to increase some more volume in there too. Remember what I said, guys, like smart money was loading up, right? So that was our Friday candlestick. And it's quite important to see how that Friday candle closes because they can't hide their orders, right? You'll see it in the candles. So you can see the candle actually pushed above resistance over here. So we got some big money already being keyed in there. Because they got to get in earlier. Remember that. They're the market movers. So they got to get in earlier. So we can see that there's a conviction here. Obviously, that price can continue to move up bullish. I was just thinking, like, should I take a... I probably should... All right, wait. I'm going to wait for this candle here to close. I think then we're going to get, like, a small... kind of like a head and shoulders. Here. So when this candlestick here closes... Damn, it's pushing all the way. I wanted to first close. 2 seconds. I'm going to wait for a break here. All right. I got stuck in. I don't like the way the 5 minutes kind of extended though. Oh man, I might be getting stopped out. Probably should have been a bit patient. Yeah, damn it. I'm getting stopped out here. Probably should have been a bit more patient. Because of the way that 5 minute is kind of extended. 5 minutes gonna close in 2 minutes. Damn, I know this thing's gonna break out from this area though. Got like 2 minutes for the 5 minute candle here to close. Damn, should have been a little bit more patient. How much did that even push? Wait, let's see. From here to here. Push about 50 pips. Let's see how it would play out if it re-broke the highs. Damn, man. Why'd that candlestick have to pull up like that, though? Thing ripped up like 60 pips. Oh, 1 more minute for that 5 minute closure. Then it's gonna be like a shotgun play above the highs with an accumulation breakout. Come on, Goldie, give us these buys. Waiting for these buys this week. Stop playing with us. Just quite interested to see how it's going to break this area by 51.30. No, 51.40. There's 30-minute gap on the one up. Yeah, now we just got the new 5 minute candlestick open. Didn't even close above that resistance, so don't get the shotgun play confirmation. But it would just be a breakout. I'm just gonna watch how it plays out now, chat. Like, I already gave my shot for I already gave my risk here. Damn. So it's just about being disciplined, correct? It's not about being right. It's just about being disciplined. So let me just see and wait. I'm gonna see how it breaks these highs. See if that actually plays out. If it doesn't play out, it's gonna actually make me feel better. But this is now the area that it's kind of accumulating at, waiting for that break. It just closed right at the resistance. Yep. Check trades taken. I took a generational L. All right. We'll have a look. Vic, you're a CRT trader? What is CRT? Don't know what CRT is. Damn, today Goldie's been it's been choppy. It's like kind of difficult. It's like it knows it wants to move up, but it is not making it easy. This is just the beginning of the week. We still have like a lot more anticipation for the rest of the week up ahead. I really hope it breaks the highs and rejects. Then I know truly I couldn't have done anything to catch the buy right there. So now we're just waiting. See, it's kind of chopping up a little bit. You got some rejection wicks here, some rejection wicks down over there as well. FDRs. Yeah, we got FDR. We got a FDR. Woods has been studying his acronyms over the weekend. We got FDR right over here. About 108 pips. Curious of where this volume came in from here. It should have been like the follow through. Even if we pushed up like 50 pips, we could still see candles push more than that. I mean, look at this candle, for example, here. That candle did 142 pips, you know? So, could have like closed, boom, and then continue to move up. Forming a little bit more of a nicer looking head and shoulders here as well. You got left shoulder, head, right shoulder. Break above that high. Oh, CRT candlestick range theory. I forgot about that. Yeah. What else we got? Damn, I forgot the abbreviations. FDR. I think there was CME. Oh no, it was something else. Can't remember them now. I can't remember them. Damn, Goldie. Look at that, just flirting with the idea to fill that area up. Man, now all I gotta do is watch. It's no fun. It's no fun. I'm gonna watch it break above the highs. I hope it pulls down. I hope it pulls down. I hope nobody... Oh wait, gotta remove this banner over here. If I'm not gonna take the trade, I hope nobody takes the trade. I hope everybody loses this trade. All right, let's see. It's about to break above resistance. This will be the one that I'll be getting stuck into right here. Because this one could have just moved up though. That's a crazy part. It's a crazy thing. Like right here could have just still moved up. That was still valid to me. Boom, 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 boom. Cancel close above. We got like somewhat of a decent break. Wait, but what's going on here? This candlestick did not have a top wick. That's a glitch, bro. What just happened? That candle did not have a top wick. Otherwise, I would not have gotten in. What the hell was that? Yo, chat, just got robbed from the market. Yo, that candle didn't have a top wick. Otherwise, that would have invalidated my trade. Dude, that's not even a fair loss, man. Come on now. What the hell is it? Bro, look at this. That would have invalidated my trade. I would not have gotten in that trade. You see this? The candle didn't have a top wick there. There was no freaking top wick, chat. There was no top wick. Bro, look at it on the 5-minute here as well. There was no top wick. And now all of a sudden there's a top wick. You see, it didn't even break the 2-pip mark that I was looking for. Why is there's no top wick on... There's a top wick. It's so weird. There's a top wick on the replay. Right here. There's a top wick on the replay. But you see, when you remove when the replay is done, there's no top wick. Let me check my broker. If my broker had a wick. My broker has a wick. Actually, the entry on my broker looks so random. There was a glitch there. But my broker does have a top wick and it didn't break. It didn't break the top wick either. What the hell was that, man? I've never experienced that like that before. Ask for a refund. Can't pick a daily bias until the dollar index gap gets filled. Happens a lot in the 1-minute time frame because of how fast the market is moving. That doesn't like I haven't experienced that, man. At least for me, towards like an entry point like this at a high volume area. That's why I'm so surprised, because I've never seen that before. Like where you go on the replay at the entry confirmation point, then it shows a top wick. That's a first for me. Because these are the entry points, right? But obviously random events can happen in random areas. I don't even pay attention to that. I'll only pay attention to like where the high probability setups are. Yeah, that's a bit unfortunate. That is a bit unfortunate. See if it breaks the highs and then plays out. Let's see what would have happened here today. But that was no confirmation. There was no confirmation over there. It's the same way as, remember the trade from last week, Tuesday? Like how it came right to break it, but it didn't break. So we had to get out because there was no confirmation. And then that trade failed. And then we got the trade with the confirmation and then it played out. But in this situation, we got like a small little glitch. It's setting up and it's cooking up so nicely as well, which is, you know, now it's cooking up so nicely. If it starts to re-break 51.39. Man, tough start this morning. I haven't had a trade this morning and I was trying to hold a runner, but I got stuck in choppiness when it was breaking, so I managed to get out BE. We got US 100 right now. It's starting to fill up this area over here, the FDR. Should be on the way up there in US 100 too. Yeah, I see market, so was a top wick. Yep. Let's watch this thing break now. Man, it's just gonna give it such a clean entry right here. But we've yet to see the bullish exuberance really kick in. It's not gonna happen. Maybe it's gonna happen later on today. This is some kind of a pricing in for a bull run later. Well, we are still bullish. We are still up like 0.75%. I wonder why that happens, right? Why is it only on the replay though? That's a weird thing. It's only on the replay. That's the same top wick that's on my broker. You see, like, it's a high volume area. You know, like I'm quite cynical about markets in general, so I wouldn't be surprised if they cook something up over here. If they try to cook us a bit. One thing about me, I'm very cynical about things. You know, especially when it comes to markets and certain things like this happening, because, you know, we know these areas. We know the value of these areas. Yeah, I mean, get over it. Yeah, I mean, at the end of the day, it is what it is, right? It is what it is. We just keep going because the market anyway in general is full of variables. I get it. Like, there's always going to be something, you know. Like, there always can be something. That's why we focus more on longer term data than individual trade setups. But it's just annoying because I really did just want to catch, like, I don't know, like this Monday. I thought this Monday was going to be a lot easier than it is. Following the all that we have in store. For me, I'm wondering why it's selling off so much. Like, we're still bullish on the daily, but we also got the Trump tariffs. We got that, and we got the war. Gold's bullish structure strengthens. Technical analysis shows. Gold bullish structure strengthens the technical analysis. This indicates that the previous key resistance, adding gold to its current trading above. What does it mean, technical analysis? Gold price spikes because FM Sridhar Raman explains yellow metals rally. Gold price spiked because central banks globally buying a lot of it, said at a press briefing. The minister also said the government will continue signing trade deals with other economies as they benefit the Indian economy. Silver ETFs jump over 6%. Gold ETFs gain 2% as Trump's tariff ruling Soft dollar lift bullion. They're really not talking about the escalation in Iran. That should be the main thing. Man, they got like a lot more weaponry there than usual, than previous wars. So this is gonna be like a very, very big thing. I doubt that they're gonna come to an agreement. I really doubt. What do you think the probability is that they come to an agreement? It's pretty low. And, you know, this is gonna affect a lot of things. Like countries like China buy most of the oil from Iran. You know, and now they took away the Venezuelan president and locked Venezuela up, country with the largest oil reserves. Like this is much bigger than just like a war between the US and Iran. So, you know, it's quite strange that we're not moving up properly yet. I guess the market's just waiting. So yeah, I'll still be looking for these big buys. Because we have at least gotten hints that smart money is in to some degree with all the volume we saw on Friday's daily close and the market open push up. Like it's breaking into a kind of larger range. Over here, you got some kind of resistance, so creating support. Boom, 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 and then it's gonna start breaking out, possibly within this hourly or the next hourly, hopefully. But yeah, it's accumulating right now. It's getting ready for a push. Hey, belated good morning. System's near perfect, bro. Fundamentals just messed up you a bit. And it should be supporting it, but trenches are still the trenches. What is the name? What is the meaning of HQ? What do you mean HQ? Do you mean NQ? That's a NASDAQ. It's like an index. So you gotta look at it here. It's starting to push up. It is at the weekly support or weekly demand zone. And the daily looks good. Oh, what time frame were we looking at here? Was it weekly? On 3D, let's see the 4 hour. Oh, that was a 1 hour. Yeah, the 1 hour looks good. This is some kind of a clean range for price to keep moving up. It's kind of distributing from this area down over here, breaking highs by 24,806. Got clean range to keep moving up bullish. HQ means Hasdaq. Let's see that generational loss. In this 15-minute kunai, if an alarm is triggered, I'll reduce how much is in. Oh, nice. Yeah, I gotta set some alarms here. Wait for that to play out. This is on the 15-minute. It's gonna take some time. We're in the same trade, broski. I took this trade last week on my Cent account as a paper trade. This would have been generational wealth. Oh, nice. What time frame is this though? That's just a 15-minute though. Stop loss is also kind of big. Wait, what's going on here? Like, I thought you said generational loss. But this is a 1, 2, 3. It's like a 1 to 4, 1 to 4.5, somewhere around there. Up like $1.44. Yeah, that's why you got a big account. You got a big account, man. You don't even need a one-to-one to have generational wealth. You have a 0.5 risk to reward and still be good. Because, you know, money is money at the end of the day, correct? It doesn't matter if you catch it taking 5 pips, 10 pips, 20 pips. As long as at the end of the day that you're going to secure something. Right? You're going to secure something. Because sometimes people get too caught up in pips that... they're seeing their moves move like 20 pips, but they don't secure because they're waiting for more pips. But in that scenario, what you got to do is like increase your percentage risk if you're not happy with your profit. Because that's going to be easier than trying to push the market to do something that it can't do based off your entry confirmation. So again, it's always about like just controlling what you can control, right? So you can't control a 30 pip move and you can do 20 pips. Just increase your risk if you're not satisfied with the profit. Looks like it's still pushing down. Would not have confirmed the break above the highs. On the 5-minute, this clean range is correcting some of the push that we got from market open. Damn, chat. Like, I'm just waiting to see the setup. I'm waiting to see the second setup. You know, we covered this, like, people joined the simulation yesterday. Remember, like, how we basically did it? So... this is now, we're just testing it now. So it's really not that different from the simulation. We just gotta wait longer for the next move. But you see, like, the question is how added with the top wick though. Right here. Like this. I've noticed the candles change, but not like this fast in such a short period. I've seen the candles change, like, you know, sometimes more towards the end of the day, or like after a few hours pass, maybe a 5-minute, the way it closed during London isn't the way it looks like it closed later. Like, I've seen that happen before. That's normal, but I've never seen that happen like this fast in a matter of seconds. I guess I get sometimes like those small updates happen, but not like this fast. That's crazy. So yeah, we're gonna see. Maybe towards the end of the day, for example, I'll check and we'll see if that wick appears without being on the replay button over here as well. We'll see. There's gonna be like a wick that might update later. So if you did like now a simulation session, you're probably just gonna have the wick over there. So that would mean we're kind of still waiting here. Got late today, traded Asian, waited like 2 hours for a trade, low because I went big. By looking at the chart, I took last buy. Yeah, Ricardo, that buy idea would have played out real nice for that Asia. Unfortunately, like, it just moved so fast off the open right here. Boom. And then when it started to settle down, it was already settled down in kind of like a weird way, correct? Not typically, like, I think the best case scenario would have been, obviously, if like price came down, you got your retracements and then the continuation. That would have been a brilliant Asia. But you see, for Asia, I feel like the market's been a bit funny today. You see, for Asia, just went straight up. Just straight up here, and then now into kind of choppy PA. And now it's moving down. It's kind of weird, isn't it? It's like people know. You know, the thing is, like, people know this. People know what's happening with the tensions, and they're all trying to make money on gold. So I think what happened is the market decided to not make it as easy, because majority people were like really excited for these moves. Gold at ATH, we're going to be seeing that happen very soon. So I guess to start people off, it decided to shake them out a bit, maybe. Because knowing Trump, I doubt he's going to wait 10-15 days. Like, he's speaking on... he's going to be speaking... Let's get our dates correct over here. He's going to be speaking on Tuesday. Yeah, he's speaking tomorrow. Oh, we got a... oh, he's speaking tomorrow at 9 p.m. So we're going to be anticipating this. You see, it's a red folder here. He's going to be delivering something at the State of the Union address at U.S. Capitol building. Yeah. Bro said, get over it. Get over it, bro. I'm over it. It's putting my kid to sleep and miss the opening because I've fallen asleep also during the process. When I came to the chart, was 1 a.m. already, 2 hours into the open, so I need to wait, but nothing doing it again. It messed up my sleep too much. This is why I don't trade. That session just messes up your sleep. This is a trade I waited for a lot of confluence. 1 minute consolidation. 5 minute order flow, sell absorption, respecting the last zone here. Buyers push price last time. Risk $700, made about 1,002. Oh, nice. You still made money here. 1,230. I got it in like at the break of the high right here, but you got an earlier entry, but nice little break confirmation. Push to the upside. It paid out. I wonder how many pips this was from here to here. And then price came down, kind of mopping up. You see, like, buyers make money, sellers make money, pigs get slaughtered. Came back down, kind of washed them up. So here's a very nice entry here. Entry right here. Boom, boom. Pushed up. Came back, wiped them out. Yeah, you see, this is why we don't overstay. And then some days you just get the trades just push in your favor. There's like easier trades. But in general, this is why we don't overstay. This is why we don't over risk. Because remember, we spoke about this yesterday, that the market is going to catch up to you. So it might feel like you're getting away with it for a bit, but it's going to catch up to you. Super intelligent, the market. And I've chopped it down to like phases. It usually has like really good phase where you got to make money. And then they're more like, now you got to be the more cautious phase. That phase is a bit longer. I would imagine it's something like this, just simply put. And then again, phase where you got to make money, right? But this is the phase that most people kind of mess up in, right? This is when they overtrade and they think it's still this, right? So this is when they give a lot of like second chances. They don't spread out their risk. Sometimes they even like tilt and use more risk, unnecessary risk, per trade, thinking they're still in this. But you see, we're always cautious for this part of it. That's where the market actually sets you back, because it does bad. Like, you can win a lot, but this period, it's the one that kind of takes it all back. So right now, or at least today, it's kind of feeling like a little bit of both, which is basically still, to me, still orange. It's a little bit of both because of what's happening macro fundamentally and everything, and we've already seen the pushes up throughout the Asia. But in reality, it's more this, to be honest, because if it's not really paying out easy, then, you know, it might as well just be that. That's why people can have like really good weeks, and then towards the end of the week, they ruin it. They're ruining it towards the end of the week. It's the same kind of like, you know, principle. Like the market doesn't need to do too much. Like it can just pick like a few days out of the week. Like that's enough for most people. You know, the human psychology is it's harder to build something up. It's much easier to tear it down. You know, like if you run a company for 20 years and you get into a scandal, all that years for 20 years, that all goes to waste. You know, it's a lot easier for us to tear things down than build them up. So the market understands this human psychology. That's why people mess up most of the time. That's why even like people who do funded programs, they're going to have like a good streak, make some payouts, show you payouts on YouTube, all of these things. But there's no longevity in that. You know, and if they keep doing what they're doing, they'll just end up giving it back to the market. So it takes time because that orange part is much more than the green part in the market overall. That's why people struggle. Even when they get like falsehoods of being profitable and then they fall back into a pit. It's like a time-based thing. I've even seen stories of traders do even like a couple of years profitable, like 2 years, and then their systems slowly start to degrade. Right? There's one guy on YouTube I was watching who said that happened to him and his confidence was really getting hurt. Because like he kept seeing it always keep degrading like from a month-to-month basis. So, you know, for us, we got data over here for... I started journaling here for the stream in 2023, September, but we have data from 2021. Basically, you can also go on my Instagram. You will see since 2021 here. Let's go on my highlights. Go on live account. These are all trades that these are all trades from 2021. Just go on my highlights and then you're gonna see it. I think this is 2022. I think some of the reels should be a bit earlier if I didn't delete them. But yeah, it's still withstanding the test of time because we're trading based off of pure raw price action. You know? Here. This is, what year was this? Let me see. 2022. Oh, okay. Maybe I wasn't posting. 2022. Interesting. Yeah, but so far so good. Because the market, like the way we trade is like the market can't really escape that flow. That's kind of the natural flow of price. It's either going to move up, consolidate, or move down and like try and like fill up ranges. Because it's going to leave these ranges behind and it's always going to look to correct those ranges. See, like we got a range here about like 60 pips. It does less, like a lot more trickle effects on the ranges. So you see less of a trickle effect. Like this most of the time, it will be looking to fill the range. The question is, can you get the entry confirmation? You know, because sometimes it can fill the range without entry confirmation. A candlestick can just open like this and then go up. And sometimes it can give you an entry and then you can get stuck in properly. But those ranges, they're gonna get filled. They're gonna get filled. There's free the FDRs. They will get filled, whether you're gonna like it or not. They will be filled. So if you're gonna reject those ranges, you can still make money because you know they will not always feel like so clean like this. Sometimes they're gonna have like some pullbacks as they're in the process of filling, so you can still get your fair value gap trades in there. But they will get filled. So, you know, you just make sure you're taking the fair value gaps in line with where the market is heading towards in most cases. In most cases. So you see, like right now, the daily time frame is down. The daily time frame is up. So ideally, you would want to be looking for some buy confirmations for this time. right? Now, as you approach the New York session, that's going to also be a different session. So the PA can give you like some kind of slightly different results. But the way we do it, even in the simulations, like we did yesterday, was pre-London. We could choose any direction, but we were more going with the daily trend. And then for the London, we just stuck with the daily trend. That would be the safest option. And then as you're heading towards pre-NY New York, it can shift a little bit more. Yeah, the psychology of it can change. We don't do fair value gaps. We gave up on them. I wish I could have hear that in Indian English. Got a nice trade last night on the open. I can now request my first payout. Awesome, Louis. Let's go. Get that payout, and man, you gotta reward yourself with that payout. You know, you seriously got to reward yourself. Nice little break. Damn, like breakout right here too. Oh man. This would have been it. This would have been it right here. This was a breaky. This was a breakout right here. See, it came in early. So remember again what we spoke about yesterday. Oh, we don't have the guys from, not everybody from yesterday is on the Discord here. Man, I wanted to quiz you. But you see, it came in a bit earlier. Let me see what would have happened. Would I be stopped out of break even? Let's see. I might have been stopped out of BE though. Ooh, look at that. Damn. Look at that. You can't make this up, man. 16, 20 pips. That was at 20 pip marks. Because even in the simulation, we do like, 20 pip and then sometimes leave a runner. Man, look at that. I think I would have been stopped out of break even. I probably would have waited for that area to get spiked. I don't know. It's very hard to say in hindsight what I would have done. But based off the price action, it looks like I could have still hold, expecting a little break above that area. Because surely it could push up at least 0.1 pips, right? 0.2 pips. Imagine that, like getting close to 20 pips just for 0.2 pips to have it come back and hit a break even. But I don't know. It depends. It also depends on how I got filled in. If I got a good fill, then I would have closed somewhere around here. If I got a slightly bad fill, I would have waited for that to at least push a bit more. But you see, this was the first valid trade. Whatever happened here was not valid. This shouldn't even count because of that wick. Because you see, there's a wick here, and then all of a sudden, there's no wick. So this should not even have counted because there's no entry there. That's just a random 50-50 trade. But here we got the break. Here we got the confirmation. So yeah, it's a bit annoying, but anyway. It's annoying because it doesn't happen that often, that's why. If it happened often, then it would just be like any day, but I've not seen that happen like that fast. Yeah, it would have been a pretty nice day here. Some people would have secured some profit as well. It's okay. Took it out at BE entry. Oh, you took it out BE, entry got pushed up. Yeah, you see, if that happened to me as well, then I would have been out of BE too. It's just I didn't see how it was breaking. Even, this entry I took, it's funny because this entry I took a buy here, but on my broker, I got triggered in here. So my entry actually came down as well. There's something that happened within this area. Some quick fluctuations. This just had like a retest over here. So this is what kind of happened to me this morning as well. I took a trade, but I didn't get I didn't want to close at TP. I wanted to hold. Then price came down, and then I was still holding. I was like, okay, you know, this is probably just a retest of the high volume area to keep going up bullish. But then what happened instead was like price came down. It quickly spiked my SL region and pulled up. And then there was a 1 minute bullish candle that closed. And if that candle was to flip, then I would get out. Right? But then it started moving up again. It started moving up. It started moving up. And then it started to struggle. And I put my stop loss to break even at, again, like close to the final TP area. Then it came back down. And then it was just kind of like choppy. But this is what I was expecting from the trade this morning. A push up, retrace, and then to keep pushing up. I don't know, for some reason these buys are not moving yet as flawlessly as we would like them to. And you see, it's such a perfect balance that the market can have. That's why it's not random. Like profitability and all of these things, it's not random. You know, it's like it's tailoring a suit. There's a reason you go to specific suit tailors, because you like the way that they're going to tailor their suit, right? So they're not getting lucky to make like a good suit. Like everything is measured to perfection. You know, so that's kind of like what's going on here. You can also measure the market to perfection because of the very limited or finite amount of opportunities. At least for me, I see it that way, that there is from, let's say, from the London Open to this time. There's a finite amount of ways that all the structure here could have been formed that you can find a consistent edge. It's very important for you to understand that. Like from here to here, at least for now, there's a finite amount of ways, I want to repeat that again, that a trade can be taken consistently and profitably. There's a finite amount of ways. It's not about, oh, you can call it FVG here or Fibonacci here and stuff, but the question is, can you do that consistently? You know? So that's why it's very easy for us to do a back test and say, okay, you know, from the London Open, I could have taken this trade. I could have taken that trade. This was the trade that I've taken. And that's the whole idea behind that those simulations as well. So we can see it. You remember what we did yesterday? We did every day. We came 8 a.m. sharp. Boom. We started printing the candlesticks. Pick a random date. First of all, you got to pick a random date and start 8 a.m. sharp. Boom. We start to do this. Then we say, okay, yeah, this is what we're looking for. We all know what we're looking for because that's all in the WAP database. That's all in on the data and everything. So we all know exactly what it is we're looking for. And then we start digging into the psychology of the plays, right? So you see, sometimes you get those psychological things, right? That's why they say the reason why people don't profit because that psychology part of it. So remember we spoke about the different variations of the setups that we can have. Correct? It's still the same setup, but different variations. And what you should stick with, if you're still struggling with psychology, the ones that you should stick with, those are the ones that are going to help you kind of build confidence, right? But these are more like things that can happen. Like, so you see in this situation, we had that little bit of an error over here in a live trading condition. But if you're patient and you just wait for, well, we spoke about, if you just wait for those easy ones that just kind of like would be a sin not to take, then you're gonna, you know, have a much better time. And then as you gain confidence, you start building upon your psychology and leveling up. But you can always remember that you can always fall back to the ones that you feel the most confident to take, right? As you kind of experiment with the ones which are gonna require you to like kind of push yourself a bit more to get into. And then we just do that 8 a.m. boom, 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 wait for the setups and see what we could have taken. And when you do it that way, there's a lot of elimination of like cherry picking. So you don't cherry pick your trades because now you're like actually holding yourself accountable from the moment you're on the chart to when the setup appears. So yeah, that's what I was thinking. Like this could have been like similar situation this morning. Looks like it played out here instead. Retest of the entry and to keep going up. See, so it's currently in that distribution phase right now. Leave a 1 in the chat if that made sense. Leave a 2 in the chat if not. Very, very important concept to understand. Man, if you don't understand that concept, then there's gonna be a real big character development. Real big character development coming in until you understand that concept. Because now this would have been the one that we can put on paper and have the data for to, you know, make us feel that we're on the right track. That's why it kind of like pissed me off that this happened right here, because it didn't give a fair chance to the pure data. But it's kind of what you get when you're live. You see, the thing is, like, things happen, right? Variables happen, so you can't control everything. But yeah, unfortunately, it's not a true reflection of the result over here. But variables happen, you know. Anyway, what can you do? The good thing is those variables don't happen that often. Like, I would say 95% of the time it should be good. There's a small chance of certain glitches happening, because you see, we don't have many moving parts, right? People who, for example, look at their broker and then trading view, they're gonna have more moving parts. So that means, like, you know, sometimes a candle might close resistance, sometimes it might not close a resistance. The PA will just look slightly differently because they got more moving parts. But you see, since we don't have that, then you can keep it like 95% of the time that we're going to have less to worry about in terms of those additional variables that the market has. And not many people understand this part as well, because it's like a layered thing, right? The market is layered. It's layered between like your strategy of what you think like a setup can look like. For example, like any kind of setup. Then it's layered by now the variables that can affect that setup. Let's say the context. And then there's again another layer here, which is going to be the unfortunate variables. Let's just say it's kind of like a cost of doing business variable as well. Correct? Because there's always going to be some slight bit of manipulation. Call it manipulation. So we got here context. We got here what you're learning. And then we got here the manipulation part of it. Which is where people really struggle with these two. Right here. Because when you learn on YouTube and you watch a video, and that's why I'm going to stop making those videos, because the internet is oversaturated with a lot of like these learning type of videos, like where it's like a pullback and you take a trade here, a pullback, a trade here. Because to be honest, like, people are going to watch these videos, they're going to watch like for entertainment. It's only the people who actually have skin in the game who are going to push themselves to the levels of context and understand manipulation. But on YouTube, like, people don't really put that much effort into that. That's why I realized. So what we're going to do instead on YouTube is we're going to make videos on the context of where price is going to be heading. And the best way to do that is not through learning. Because now when we go through learning in terms of strategy, you're going to get confused again. Right? Because now you're just looking for a strategy. People don't learn. They want to watch like Netflix, right, for free on YouTube. So when we talk about context, you naturally start to understand, like, you know, when we talk about macro news and how that can affect the market, then that's where I think you got to really start to get it. You're going to really start to get it and build that confidence. Correct? And then the manipulation part of it, that's just going to come with taking less trades, understanding the value of taking less trades, understanding that variables like that do happen. But man, if you got the learning part down, then the next part is just the context. And then for manipulation, it's easily remedied. And the best remedy for that is taking 1 or 2 trades a day and managing your risk. If that's going to be like 2% max drawdown per day. So that one is easy to manage. Because a lot of the time people love the question of, how can I avoid a fake out? You know, y'all are always, you know, the problem, like, a lot more people are more interested in this, how to avoid a fake out, or what strategy can I use to trade. Correct? So this is always kind of like the harder part when you're avoiding the thing in the middle, which is the part you should be focused on, really, to to differentiate yourself from somebody who's just chasing get rich quick to somebody who truly wants to understand the markets. So I think, yeah, it's gonna be pretty good. I think we need to take a break of structure up so we see buyers back in control, because it's just doing LL to LH. And still also distributed. Just broke above the highs up there. Context. Yeah, man, YouTube's too saturated with that stuff. It's way too saturated. Like, for example, let's for example go here, right? Let's talk about this one guy, Patrick Wheeland, right? So if Patrick Wheeland has a system which makes him money, that means you guys are watching the same video that he makes on breakdowns over and over and over again for the past how many years? Like, if there's one entry model, correct? Like, if there's one way to get in, this is, damn, he's been doing this for 9 years? Holy. That means you're kind of watching the same video for, let's just say, just simply simplified a bit more for 9 years. You're just watching the same video for 9 years with different editing. Or let's talk about this guy. And you know what goes on? They're just making content for content. So sometimes I might even make you content that it's just so we can make something new. You know, it doesn't mean like they're gonna trade, but just so we can make something new, because they're gonna just be saying the same thing for a long time. You see, it says like since 3 years. You've been watching the same video for the last 3 years and wondering why you're not profitable. It's not because you're not learning enough. You've already learned enough. The problem is you're not learning what you need to be learning, which is that important section we talked about, which is the context part of trading. And through that, like, everybody gonna have a slightly different what do you call it, like, learning curve, because you can all learn a strategy. You can all watch this one video and break it down, and that's what you do with ICT as well. You all watch the same ICT video and kind of like break it down to something a bit simplified that more people can just copy, right? But that's not what's gonna make you profitable. Right? You see, like, this is the same. The internet is oversaturated with these types of videos. These types of videos are not gonna get you anywhere, to be honest. So we're taking a new route, and I think that's going to give you the most insight on markets and how they operate. You see, got loads of those videos. It's literally back to back. And it's always like you're watching it like this, and it looks good like this as well, right? It also looks good like this. You feel like, maybe, you feel like you're kind of learning something. But it's only to an extent. So when you start, it's good for you. But it's only to an extent. So like somebody in the mentorship yesterday, for example, said they've been trading a demo account for 6 or 7 months. You see, that's like taking too much of a demo account. You should have been on a live account on the 2nd month. So what you're doing is you're pushing a ceiling that's already reached the ceiling. You've already learned enough, but you still keep pushing it, thinking that that's where you're struggling. And I think the thing is, like, maybe these guys don't communicate properly, because like when I was learning how to trade, that was not really communicated to me like as directly as I'm trying to communicate to someone here today. Because you kind of get caught up in the sauce and like, the marketing and all of that stuff, that you kind of like forget to teach people that trading is an actual skill beyond just like understanding what a higher high is or a lower low is. It's also about execution and your personal abilities to take risk. That's why you should be kind of nurturing. And the only way you're going to nurture that is through building an understanding of markets. That's why I can come on stream and quickly take a trade, because I'm confident about the way that we're supposed to be looking at markets. So if we see the setup, we're going to take it. We're not just going to wait around over here. So you see, That's what we like to do. Like this morning as well. I was only on the chart for about 4 minutes. 4 minutes for the setup this morning. Because we kind of refined to the time we're trading and to the what we're looking to trade. And then here, this one I was on the chart for like 7 minutes. It was like 22 minutes, 31 minutes. But man, that would have been the beginning phase right here. This would have been the area. You got this section and then break, boom, boom. That's currently in distribution right now. Let's see. We also got like a small one right here too, but not clean at all. So probably invalid that one. Unless like something like this you would take on a very bullish market condition. Like if the context of market is like kind of parabolic, you're gonna take that one. You're gonna feel more confident with that one for sure. But like this, I wouldn't feel too confident about it. And then let's see the break of the high here. That initial break that we're looking for, I think that one even still played out. Right here about, let's see, 18 pips, 20. Oh my days, it came close to 20 pips again. It's the same thing that happened back there. Wait, let's see. Let's refine this a bit more. I think this one at least hit the 20 mark before pulling down. Let's see. Yeah, we just about hit the 20 mark. We bypassed it by like 1 pip. See, but those are confirmations now. Those are valid confirmations. Everything that happened here, this was not valid. There was no setup yet. But it was just because now we dealt with the higher level. Yeah, it's like Maslow's hierarchy of understanding of surviving. The highest level here we had is manipulation, is the highest level. Because remember what they say, the house always wins, right? The house can always decide at any given time to change the terms and conditions. Correct? So that's what we had. Context, still pretty solid. Price should be moving up. Setup, the learning phase, the setup was here. We could see the setup. But upon execution, we had the variable, the hidden fees that you don't see. Which is that slight bit of manipulation over there. But you see, but whenever we got the confirmation, awesome. It's much more of a stronger signal. But when you don't have the confirmation, due to manipulation or just due to not having a confirmation, then it's a much stronger, weaker signal. That's why this one broke and it went up, and that one broke and it went up, because it was much more of a stronger confirmation. You see, even if we go on the replay button, I don't think this candle here had any problems as it was breaking. You see it broke and it even had a wick. I'll be right back. All right, we're back. We're back. Yeah, now the market is opening up a bit more. It's opening up. It's opening up. You can see there's no shark in the water. That was a hidden commission. That was a I've not seen that one before. I've not seen that one before. Look at that. I'm gonna keep pointing this out. No wick, and then all of a sudden, boom, wick. Hidden fees, huh? Hidden fees. Man, banks and markets are really good at that hidden fees thing. Anyway, let's see. 5-minute here is getting filled now. Our range is getting filled. We got resistance. We got another resistance over here. That's currently getting mopped up. A little bit of a shotgun entry on that too. Candlestick closed above resistance, broke above the high. It's currently in this distribution up here. So like 40 pips from the shotgun entry as it continues to fill up the range. About like 100 pip range. Yeah, I'm still gonna try again today. I still believe we should be able to get a decent push. So that would be my third trade for the day. But I still believe we should be able to get a decent push. I'm gonna wait and see. I wanna get a running, a slightly bit of a running trade. Maybe 2%. Not 2%. 3%. Yeah, I want to see if I can get a 3% trade for my third trade. But it's nice to see the market's opening up again. So you see it's flowing nicely. We're just filling the range. Then it's gonna start setting up again. Should be a nice bounce back up off 26 if we get down there. And the thing is, like, anything above here is gonna be, you see, most of the range has already been filled, right? So we can see this is just by 65% of that range has now been filled up. This is when people are coming in for sellers. Sometimes people look for sells within these regions, correct? But the range, the idea is that move that should be, this is like the meat of the move most of the time. And we kind of just always want to flow with the market. So if it's going to flow up, we're just always looking for ways to flow up with it. Some people are going to be looking for some shorts here. Usually by the time we're getting towards that 65% mark, we'll notice like short pressure starts to come in slightly. But it can still keep going up. We just have some reactions typically of the 65% mark. Because now what's left of this range is just going to be around 35 pips. And there's nothing above that anymore. You're going to have some more resistance levels right over here. Maybe back above like 51, 55. They start to clean up a bit more. Or for the sellers later, they're going to have this extension here to play with. This free delivery range, right? Or clean range. Clean range down over there. Let's go back in the 1 minute though. You see, this is all distribution. Yeah, like it's extended like that. That's all payout. That's all payout. That's just all payout. So you can kind of, you don't even like to help for visual purposes. You can kind of disregard this and then look at this as just pure payout right over there. That's what that is. It's pure payout, right? So sometimes you can get in if it gives you that entry confirmation again. Like there was one confirmation here, there was one here, and there was one here, which is that shotgun play. So there were about 3 TFX concepts here and here. Now the reason I could not take either one of these is not because I'm scared or I don't, you know, it's not that. It's discipline. That's all that it is. Like if I'm going to tell myself I'm going to take 1 trade per session, I have to hold myself accountable to that. Because if you start lying to yourself, then your subconscious is going to know that it can't trust yourself. You know, so if you're going to set yourself rules and then you don't follow those rules, your subconscious is going to know that you can't trust yourself. Right? But you see, so now, because you know the way the human mind works, it's always against you. All right, like small little distribution here by 65%. See, really nice reactions off of it too. Got double tops right there. But I think this candle needs to close first because that's not been fully formed yet. But yeah, the human psychology is always against you, and that's why trading is so difficult for the mental, because the human psychology is just not built for this level of a concentrated. It's like more of like a concentrated discipline, you know, because trading can be so simple but so difficult because you're gonna try really, 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 really hard. Correct? When you try really hard, sometimes you just don't see what's right under your nose. That's why we always say, like, give yourself per session, if it is a day trader, 1 or 2 hours. Then you're going to be able to think a lot more clearly. Because sometimes you even come onto the chart and you're going to see your setup immediately and you don't even have to think like that much and you know this is it. But the longer you're on the chart, the more that the market is going to start to show you things which are not there. Right? And because you've been waiting for so long, now you start to get really impatient and you're willing to take just the next best thing. So it's quite important to always reinforce that discipline every single day. You know, from the amount of trades you take, the amount of chart time like you put in the market for live execution. You can look at the charts longer if you want to, but for live execution, that should also be limited. Because you have to constantly discipline yourself, right? Because humans are just like animals, right? We're just a more intelligent animal. But we still have intrinsic behaviors within us that make trading difficult. Because this is not natural. If you think about it, it's not natural for a human to even be doing like such things. When God created us, He did not create us with the markets. We just have the ability to have these things. Correct? So we also got to make sure that that we're being very careful about like the approach that we have. So yeah, even though like, unfortunate thing like that happens, this is usually where tilt can start coming in. It normally comes in when people don't feel like they deserve a loss. Correct? And that will happen to any trader. It'll happen to an experienced trader. It would happen to a novice trader. That feeling of you don't deserve a loss, so you're gonna keep trading. But trust me, that's just what the market wants you to feel. Right? So you got to give yourself a shot here, give yourself a shot in a different time, and then maximum of 3 trades a day, different sessions to spread out that risk a bit more. Because the idea is you're making it hard for the market. You don't want to make it easy for the market. You know what I mean? Like, if you know if there's a shark in the water or anything of the sort, like you want to wear out the shark, like kind of starve it out. You want to starve out the shark. Like, don't keep feeding and don't keep entertaining the shark. It's just gonna stay longer. So you gotta tire him out, starve him out. Sometimes it's the best strategy, because that's what the market does in essence as well to traders. Traders who are getting lucky in the beginning, the market kind of starves them out. So in the beginning, yeah, it could pay you your payouts, your funded programs, but if you know you're profitable and the system is not stable, the market won't always take it all at once, but it will if you make it easy for it too. It will take it all at once if you're a lot more aggressive and over trading and revenge trading. But if, let's say, you got some level of discipline, what it'll do instead, it'll just starve you out, like slowly but surely. That's why instead of like focusing on funded and payouts right now, I would say just do it the old school way. You know, the way we used to do it back in the day was like just have back in 1990, back in the day, we would just have one account and try and be profitable at that account. It didn't matter, like $500, $200, whatever. We just try to be profitable. So I would say that's the best way, because now you're focusing more on the skill and not just the hopes of a payout. Because those systems, they don't make you disciplined. Discipline is intrinsic to your own character. There's no such a thing as an app that helps you be disciplined. There's no such a thing as a funding program rules that help you to be disciplined. Like, if you think about it, how ridiculous that sounds, then you gotta understand. You know, discipline is within you. All that gives you is like motivation. When you have motivation to potentially get lucky to a payout. But yeah, discipline is within you. Like, every day, when motivation goes out the window, discipline's supposed to kick in. Don't see results, work. Don't see results, work. Just keep working. Don't see results, work. That's the kind of frequency that you need to be on, right? So that has nothing to do with your account size. There's no indicator that will keep you disciplined neither. Yes, sir. It's trying to break above that 65% mark. But the truth is, like, even as I'm saying this, like, only maybe not even 1% of the people listening are gonna, you know, I'm just talking to like one person in the chat. Like, it's the unfortunate thing. Like, for some people, it just takes longer to understand this, you know. And this is, for example, one girl I've been watching, right? Her name is TetraFX, and she's a perfect description of this because she blew up on Instagram. Right? And she's one to do like a lot of these funded programs. Like, she's got like a natural, I can see that natural progression, like, of actually trying to be profitable. And also what a lot of people go through, it's she get like some payouts over here. She even like took her mom out, and like she does a lot of, she really celebrated the whole idea behind, like, you know, getting her payouts and everything. Because of my experience, I can see what's coming up ahead for her. You see, like, recently that came to fruition. Right? And she even made a video. Not that I'm hoping on people's downfalls. No, it's because, like, I understand how the market starves people out. Right? I understand how you can pay you out for now, but if you're not moving correctly, it will starve you out. So eventually, like, she got humbled here and she said, you know, okay, I'm not getting the results that I want to get. Maybe the payouts are not coming as easy as they were before. We can see, for example, like things like the gold market and markets in general have been more consolidatory. So this is a period of starving. So it's now starving out these traders. You see, and now she realized she got to go back to education and refinement. And, you know, that's when now you start to understand now the context. Right? You see, if you don't point that out for someone, that's why mentoring is so important, right? Because even Tiger Woods needs a coach to tell Tiger Woods that he's swinging in a certain way that may not be correct. Like, maybe his angle is a bit off, or like something is a bit off. Because sometimes it's harder to see it for yourself, but it's easier for someone on the outside to see it and pointing out for you as well. So this is all now about context, like understanding what environments was she getting these where are these payout videos? What environments the payouts were coming in, so you can differentiate between your system actually performing well It's got some payouts over here. Your system performing well and just trading in ideal market environment. Because ideal market environments, they don't build your character, right? Most of the time you will be in the trenches. And if you cannot survive the trenches, you won't survive trading. Because generally speaking, if you look at all the correlations and everything about the market, it's like, it's kind of compressed like this. It's like a stable coin, correct? That's why your currency never gets like high fluctuations and the dollar remains stable for the most part. It's posted like this. And the thing about the market as well, the market is fractal. So everything on the lower time frame happens at higher time frame, lower time frame. So even though you're seeing like swings like this, haven't you ever wondered like where you can see big movements like this on intraday charts, but if you go to the Forex Bureau, like you still get relatively stable exchanges, right? So there's like intraday swings that make it seem like the market can be like very lucrative, but in essence, due to the way the tick movements behave, and you know, it's not always going straight in one direction. Sometimes you have like candles do this, right? Like even if a candle closes like this, it could have come down, stops you out, and still close like that, for example. You know, you still have that those fluctuations. That's another variable. Again, we talk about Maslow's hierarchy of needs, but in form of trading, it's that manipulation variable over here, that hidden fees, the hidden fees that you don't see. So that's why I'm saying like this is super important. All these things you're gonna learn like with time. You don't have to learn that now, but with time. But the idea is like we're opening the door to those conversations. They show you like what the market is capable of. Because in hindsight, it looks quite simple. That's why you watch a lot of videos on YouTube, and you know it looks very simple when it's done. But when you start to do it, you start to realize, maybe there's a different layer here that I'm missing. So it's just all about bringing that conversation to light. Because you know we want to move correct. We don't want to move fast. And every day we drop a few gems like this when the opportunity comes that we speak about it. And I think, you know, it's a good thing to say it. It's a good thing. But if you're new to trading, it sounds complicated now, but the complication is also good for you. It gives a small shock to the system. It's like if I'm going to teach you, like that's what I was saying on yesterday's simulation session. It's like if I'm going to teach you to swim, I'm going to throw you in the pool first. So you can get a shock. You know, that initial shock of, damn, this is my first time learning to swim. Like, this is how it feels like. And then later we can put on the floaties on you and teach you technique. But that initial shock is what you need. You know, it's like a realization. Like, you know, you kind of it's like a baptism, right? And then later we kind of give you the floaties, and then you gotta like take the floaties and you gotta learn. Now the problem with like throwing somebody in with the floaties is they're always reliant on the floaties. Correct? So these are the people who you find are going to be trading, like we had that one student, 6 or 7 months a demo account, or still watching videos 5 years into their trading journey, still watching these YouTube videos thinking that they need to keep learning more from a strategy. Right? Not knowing that the learning comes from removing the floaties. Correct? So now you're in the water and you've already gotten, you know, you're swimming without the floaties. That's why you can see we try not have too much analysis as well. Like the way we trade is we kind of like to keep it open and also just see the market for what it is. It's not always about buy signal, sell signal, buy signal, sell signal. The market will set up a point A and then distribute a point B. And then you have to wait from this point, because you see now as we filled up the range, there's no setup. So it's more even random in a situation like this, right? Because we can see where the point A was down over here. We could see where it was heading to, that resistance. And now what happens at this point is like now we have to either wait for like a retracement, a pullback, we're going to see profit taking, and then you got to wait for it to set up again. Then that cycle repeats itself. Right, so it's just kind of looking at the market. And the only way you do that is if you allow the market to breathe.
To the first person, when I went to the first person, I had no money. And I said, how much money do you make a year? And he said, $400,000. I said, impossible. I'm making $10,000.
That's probably more than your family had made in his entire existence.
Yes. And he makes it in a year. I said, what do you do? And he said, it's too complicated for you to understand. Which is what the main thrust of Wall Street people, they want to tell you it's too complicated. Because if you understood that that person was simply, he had a brother-in-law, in fact in this case, who ran the pension fund of General Motors. His brother-in-law would call him and say, buy 1,000 IBM. He'd hang up the phone, he'd write it out on a ticket and walk it to a window. That was his entire skill set. Hello, write what my brother-in-law says, walk it to a ticket window. If you talk to really...
There's other things that he said.
If you talk to really experienced and successful...
you know, like him or not, it has nothing to do with what's going on with his name.
Wall Street...
it's always about like... You can't take away from him that this guy worked with like very high prominent people, regardless of
in many
how you personally feel about
Wall Street. Wall Street makes it sound complicated, but Wall Street...
But there's a part of it where he talks about how also the traders in Wall Street, it was talking about how it's like a feeling based thing as well.
Makes it sound complicated. They don't want the...
2008.
Yeah, this was actually a long interview, almost 2 hours.
Right?
Holy.
You know that. Do you think there's anybody in the world today?
Oops, that's a good...
Yeah, like it's almost like a feeling based thing because you kind of have to get rid of the floaties, right? You got to get rid of the floaties. So just look, this is simply the easiest way that we're going to explain the current market condition. Accumulation of orders right over here, right? You had one down here too, and that was the breakout from this area. So this is all distribution. Sometimes it gives you opportunities to get in, right? So we can see this as a holding phase right over here. See that on the line graph? It's like a holding phase. So you got that much larger holding phase, you got a smaller one right over here. Nice little SMA confluence as well. You got the SMA crossover right over here. And we got one entry, break of the high, one entry here. But this is, you know, the thing about the market is, let's just take away all of that. Let's just take away all of this because the entry confirmations give us an edge to get in. That is correct. But the market doesn't necessarily know about the type of entry, specific entry confirmation. Because some people, they're going to get in here due to maybe those volume balls or something of the sort. There are going to be different reasons why people are going to get into even entries right over here. Everyone's going to have like a different reason. But let's strip away all of that for a second. Yeah, just bear with me. And let's just assume that all the market is doing here is just gathering orders to continue to eventually distribute, which it's done. In the most purest, simple way of understanding how profitable trades work, it's just simply like this. You're going to have that accumulation phase, then you're going to have that distribution phase. Right? This is just how markets in general work. But when you start looking at other means of trading, like trading pullbacks and all of those things, you see, you kind of get into a different realm of trading theory, right? You're trying to get pullbacks maybe with Fibonacci. Maybe now you're looking at fair value gaps over here for whatever reason, pull into. You're starting to kind of now complicate the process again, you know, because maybe that's just the kind of like, you know, educational background that you're gonna have. Because yeah, you can't trade more than just one way. There's 1,000 ways to skin a goat. Even if you look at one hedge fund, maybe, you know, one Goldman Sachs trades very differently to another hedge fund. They're both making money, right? But they maybe both have like different schools of thought, correct? So you gotta find that one that kind of makes the most sense to you, that has the least amount of bullshit. Because it's easy to get caught up in strategies and the most complicated ways of looking at markets. And it doesn't serve a retail trader to overcomplicate themselves. It will only hurt their progress more than it will reward them. So a proven fact in just the business world and anything is we're always going to have phases of accumulation and distribution. That's essentially what the market is. It accumulates orders, then it distributes. That's why even people like, you all say, like Warren Buffett would say, it's just an instrument of transferring wealth from the impatient to the patient. So we accumulate from the impatient, then we distribute. For Warren Buffett, this happens on a much higher time frame, and he uses different layers of due diligence, such as he's more macro fundamental, not macro fundamentally, but even beyond that, he looks at a lot more of the details in companies and why they should be performing well, etc., etc. But patience has always been the thing that he would advise, you know, like always just be patient. But you see, his perspective is more higher time frame. So if you're a day trader, you can still have that higher time frame perspective, but like on a shorter time frame. Just as long as, because the market is fractal. Remember, anything on the higher time frame will still happen on the lower time frame. Correct? So it's the same thing here. You got like a pocket of time of patience. It just happens a bit faster, and then distribution phase. Most people go wrong is because they don't know when to stop trading. So it's much easier for you to be involved in the market a lot more often on the lower time frame. And that's why that general consensus of day trading as a gamble is something that is pushed out a lot, because most people, generally speaking, will just not be able to have that discipline to, for example, you know, take one trade a session, manage their risk, not overtrade. Because every day you kind of been put in a position that the market is always going to test you, like literally every day. It's going to keep testing you to see if you're following your rules. So it's a high pressure environment. So you just got to know, like, you know, what you're getting yourself into. So never let the market put you on tilt, because then the market wins if it gets you on tilt. Very easy to do that on a intraday trading. Yeah, now we filled up the range. See, it's come up right towards that resistance by 51.50, and now you're seeing pullback. So we're at that B phase again. You see, like point A to point B, and now it's gonna set up again. It's gonna set up. That cycle is gonna repeat itself. You see, this is why I like the simulations, because in simulation we can skip through it like a lot faster. But you see, when we're doing like live trading, we just gotta be waiting over here. But you see, like on a simulation, we can skip through it faster. We could even take like you know, a few more trades and everything like that, because we can just skip through the days as well. Right, so you can just do that, boom, 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 skip through the days, because now we're looking at the same range over here to get filled up, and see, we got filled up pretty nice. We know what we're looking for in the. Let me see. This was about 1 hour. How long did we do? Like 1 hour 45 minutes, which is crazy, because we wanted to call it. We wanted to call it at a 40 minutes into the sim. I was right about to call it, but we ended up pushing about 1 hour 40 minutes. Let me see. Did we get any of those? How's that range fill? I see, that was that range fill right here with that little shotgun entry. Essentially, it's this kind of same thing that happened as well over here. Just like slight different variation, but same concept. eventually always get filled. And see it from my right here to here, and it filled it right to the T, and then from here to here came down. Even this one still got filled, like the break from, let's draw the zones you got here. Yeah, all right, let's change the color as well. Let's go with purple. Here got filled, here got filled. Even when it consolidated here before the break up to fill the next area, which is up here, it still filled the range of that wick. That wick still came down to hit this zone. Hit this zone, hit that zone. Boom, boom. Even though there's a small one here, small range here as well. But it's like a lot choppy, a little bit more choppier. Came down, fill that range. See, but if you trade like a different method, then for you, you'd kind of be expecting like retracements. Most people are going to be trading those FVGs. They're kind of looking to get in the middle, somehow in the middle of the ranges, because that's where a creates that fair value gap, right? It's like when the price pushes strong up, right? It creates that fair value gap. That's what the essence of it is, when it pushes strong in the same direction. So the idea is to fill that area and then come down. But you see, we do the opposite. The idea is to fill through that area based off of what we see that the market does over and over again. Like right here, break above, fill that area. Now the only question about it is how to get stuck in, right? It's not just randomly buying and expecting to go up. It's like, how can we now at this point, now that we know the direction that price is going, how can we get stuck in using a good trial and tested method that we can consistently execute on? That makes sense. Not only makes sense to us, because we also try, you know, when you're gonna be trading, you want to try and be as objective as possible and not as super refined, right? Because sometimes the more that people are gonna see it, in a sense, or see the opportunity of where price is, the better it is for your setup. But if it's over specialized, how many people in the world, for example, do you think see a fair value gap as opposed to a consolidating market? You know what I mean? That's why if price ranges a lot, you'll also see on TradingView news, it's going to talk about how gold is rangy, how it's just waiting, because we can all see it. Gold prices whipsaw as traders digest new tariff threats. You see, like, for example, that's a keyword right here, whipsaw. What did I say even this morning? This morning, you see here, out, conditions are too choppy. We could see that the market is whipsawing. Even though we're on a bullish trend, it was still whipsawing. And we could even see coming into the session here that markets were still pushing down a lot, even though it should technically be moving up. And also we had some few variables happen here that affected the trade, etc. But we could tell there was definitely a bit more whipsaw today happening on gold than what we would have expected otherwise. You know what I mean? So that's just kind of the thing. That's the thing that we speak about when markets need to be easier to read, not only for yourself, but for general. That's why we're really looking forward to the uncertainty that's about to be created here in Iran and the US tariffs, because that's kind of going to put us all on the same page, right? And that's why I'm still looking at this daily here to keep pushing, and I still want to get a buy, because right now we're up 0.90%, and I still want to get a buy later as well, because as long as the daily is still kind of creating like some kind of a bullish volume, I still think we're gonna be more on the same page. And then that's typically when trading becomes a lot more fruitful, and that's when you're gonna see a lot more people again pass funded accounts and that whole thing. So we're getting back into that phase again when you're gonna be seeing a lot more people do pretty well in the market. It's just like this is just the beginning, but definitely cooking up. My friend who gambled got in yesterday night. Oh, nice. At 51.05. London slow today. Yeah, London's only had one move, which has just been this push here to the upside. It just had that one distribution, right? Now it's trying to kind of like set something up again. Because you see, the thing is, like, you see, it's trying to accumulate right now. The thing is, if price is gonna go through resistance right over here, again, we need to have orders accumulate. Because, you know, when you look at the chart, it's really, you're never gonna always just see like a super strong parabolic chart. Like, candles need to retrace. They need to accumulate orders so they can continue moving up. It will look very weird if you look at a instrument and it's just moving like this, isn't it? So like, to get through this zone, we have to accumulate. Then we're gonna have enough orders and ammo in here to break above this area. So that's currently what it's trying to do right now. This is gonna require a lot of like heavy lifting for PA to get through that zone. But that's what it's doing right now. That's what it's cooking up. So, you know, it's kind of like, it's gotta have its own language. When the market stops, you gotta listen and see what it's like talking to you, what it's telling you. Just the same way after we pulled down, it stopped and then gave the entries and then distributed. Now it's stopped again. Now it's trying to set up so it can push beyond that resistance. It's gonna need more players involved. You see it? How do players get involved to make these moves happen? How do they get involved to make these moves happen? Is because it needs to be also somewhat obvious to them as well. Correct? You see, that's why trading is such a simple thing, but it's so difficult. It's so simple that it makes it so difficult. You know, but the market has to be simple enough so we can see these high value areas that it can distribute from. Because it can't move up if people are not buying. Correct? We have to have a good amount of buyers, and also now people also selling. Because most people, like, let's face it, the majority of people are going to be losing money. We're not going to have a problem with liquidity over here. We are definitely going to have sellers involved as well. And it's just kind of like paying out. You see how it's like paying out the simple strategies. It just pays us out simply. Right? It pays out simply. That's why I showed you that video of Epstein saying in Wall Street, they don't want you to know that it's simple. Correct? They want you to think that it's complicated. Because you see, like, a lot of us, we're gonna always want to learn. Keep learning, keep watching videos on YouTube. Right? Because now you're overcomplicating it. Too many retail traders are overcomplicating it. When all you got to do is just have a simple entry model and just not overtrade and just manage your risk. And really just keep building that context bone in you. Because the learning bone, you already got 6 abs. You got an 8 abs or whatever you want to call it. You're already good with the learning part, most of you. Especially if you've been trading for like longer than a year. Because I would say the first year is the most important for learning. Correct? The first year, just learning candlesticks, how price moves, all these terminologies. First year is perfect for that. Second year is more of now you gotta start working out a different muscle, your context muscle. Because learning, you can learn fairly fast. You know, so for example, if you already have a good context in the market, man, if you join the mentorship in 3 months, you're gonna already learn everything that you need to learn, right? Because now you already got the context. You've been trading for a while, so it's gonna be like, for you, that progress is gonna be shorter. But if you don't have the context and you're still learning phase, you know, it's gonna take you a bit longer than 3 months. You gotta learn 3 months. Okay, you're gonna be definitely at an elevated level, but you still have to work out that a context bone, which, you know, there's no escaping in any field. Trading is no different than any other field. But it's just about like, you know, getting the foundation correct. If you don't have your foundation correct, then you're either gonna spend too much time on learning, or just focusing on the wrong things, like how to always avoid fake outs. Learning and fake outs, because you think the reason you're not profitable is because you're getting faked out. Because every system is going to have manipulation. You know, whether you're gonna go and trade FEGs or order blocks or orbs, they're all gonna have manipulations. Correct? But you're trying to find it in a way that is 100% strategy. But the true 100% can only come mentally. And the truth is, every day, the only thing that can be 100% strategy is your mental. Literally, that's 100% strategy. Were you disciplined today? Did you take the amount of trades you should have taken? Did you manage your risk the way you should have managed it? Then you can have 100% strategy in context. But you see, that's a missing piece. That's a missing piece. And man, you'll be surprised like how taking less trades actually goes a long way. Correct? If you want to rob a bank, if you can do it slowly, it's a much better approach than robbing it all at once, because everybody's gonna know that money is missing. Like I had a buddy, like his dad was a part of the stakeholders of a major bank. Yeah, he was one of the major stakeholders of this bank. Correct. And what happened was there was a guy in that bank who was stealing money or making transfers little by little, until the bank gonna realize like quite late that they're losing a lot of money. Correct? Like this is what that guy did. But it was only towards the tail end that they realized that they're gonna be losing a lot of money. So he got away with it for years. Right? That whole story ended quite sad. But that's the kind of like idea with trading as well. You can't just want to like rob it slowly. 1 or 2 trades, maybe 3 trades maximum. Not over trading, and it adds up. Like this year so far, I mean this month so far, I've already taken like 26 trades. Right? We're not over trading at all. You see, every day we take it slow. This morning, BE. This session, small loss. I'm gonna try again. I'm down for the day. Slightly below 1%, and we take the third trade. But we're doing it based off of how the day is unfolding. If I take like 2 losses here and I'm down like 4%, for example, then we're not trading anymore. Well, that's just a trick. It's just moving slow and steady, so you don't tilt. Remember, it's Monday. You got a whole week ahead of you. This whole week is all about control and discipline. You know, you have to control your days and don't get worn out by the end of the week. Because at the end of the week, that's when a lot of people, they're going to be disciplined the whole week. But towards the end of the week, that discipline muscle kind of gets a bit weak. You get a bit fatigued. But, you know, the more you train that discipline muscle, the easier it becomes. The only way to avoid fake outs is not be a trader. Yeah, man. The only way to also not lose money in business is not to be an entrepreneur as well. Same thing, right? Cost of doing business. That's just the cost of doing it. Because, you know, you sometimes listen to people who are like businessmen and they tell you things like, man, you know, I just lost like $50,000 in this business venture, or like 100 grand over here. And you gotta listen to that story. You go like, damn, man, like, why is this guy even doing this business if he's losing money? Well, what they don't know is the vision that God shared to you, not to them, correct? God didn't give them the vision, they gave you the vision. So you see why it makes sense. Like even for traders, you could find a trader, have a losing month, and you'll be like, man, why is this guy trading? He just lost like -5%, -10%, whatever he lost that month. But you see, they don't have the vision. The vision is what's way ahead. Not what's happening here in January. It's what's going to happen in February, in March, in April, in May. That's the vision that God gave you. It didn't give nobody else. So that's why you keep doing the things that you do. You gotta trust that vision. Because they don't believe in you. They didn't believe in you. God did. Correct? God did. So don't play with it. Don't play with it. Have pride in the craft, in what you do. This is setting up a beautiful, beautiful breakout soon. Look at this. You see where we at currently right now? We're starting to form another point A. It's getting set up. You see, what's the difference, chat? Is there a difference between this and what happened here? Not really much of a difference, correct? Like we can see it's cooking something up. It's starting to get orders in. It's getting orders in. Not much of a difference, is there? But you see, you gotta remove all the complicated notions of trading that you might have to see it. If you don't remove the overcomplications, you won't see it. It will just be right under your nose, but you won't see it if you're overthinking it. That's why for even simulation yesterday, what was quite interesting was like when you gotta ask somebody what they're seeing and say like, okay, is there a setup over here? Let's say we do something like this, right? Then we ask like, is there a setup over here? You'll be surprised where people's eyes go to. You know, people's eyes are going to like probably like levels over here. People's eyes are going to levels all the way back here. When all that I wanted your eyes to focus on was what was happening right there. So you see, sometimes it's right in front of you, but because you're overcomplicating it, your eyes, you know where you're looking. You gotta look like all these levels. Maybe you're still gonna draw levels like this in your head, small little break and retest here. Then it only gets more complicated now if you start going on higher time frames and you start giving more data to your brain to second guess itself all the time. Now that is the curse that needs to be broken. That overcomplication. But you know, that actually comes with time, I believe. It's just the same way like Apple didn't start with what we have today as like a MacBook Air or like iPhone 17. Apple didn't start like that. You know, it takes time to get to that level of simplicity. But when you get there, you're like, man, why is it so simple and why was it so complicated before? You know what I mean? That's the interesting thing about the human psychology that, you know, is quite fascinating. But simplicity always wins at the end of the day. Like even the same thing, man. Like when I started like gymming, man, I used to overcomplicate my diet. Oh, like the recipes that I used to cook, man, so overcomplicated. Until I found a simple approach that is consistent, that you can eat this food consistently and not get tired of it. And it doesn't take much time to prepare it. It's healthy. It does the job correct. And it doesn't take like, it's not that overcomplicated. Right? But first you always got to break a few eggs to make an omelet. So in the beginning, don't be afraid to get messy, right? Fail. And then the success comes later. Then it starts to open up, because the thing is, you got to go through the overcomplications first. Fail. And then the simplicity starts to come in. Right? That's why we try and mention things here without overselling ideas. We don't want to oversell it. But it's starting to come up. Look at this. It's starting to break. Volume is starting to come in. This candlestick just pushed like 26 pips. It wants to break above the highs. It's by like 51.50. See what I mean, chat? The market language. It's doing what it's doing here. It's accumulating. It's telling you I'm trying to break above this level. Right? But we need orders in to break above this resistance, because this is going to require us a lot of heavy lifting by 51.50. You see, we kind of remove like all these limitations on the market so we can try and just look at it for what it is. And that's not what we call, that's what we call like raw price action. right? That's what we call raw price action. So we're trying to understand the market, what it's doing, like as it's accumulating after it hits certain targets, certain resistance points. We see profit taking. We see what it's holding up here, this hold up phase. It's still trying to push above resistance. And now it's pushing up. Do you see this? I hope you understand this. You see, people already left the stream because they don't understand it. They don't want to understand it. But you see what I mean. And don't take this based like off a single trade. Fine, this one worked out. Awesome. Whatever. I give two shits if it didn't work out because I know what I'm saying in the long run. Maybe for somebody else, they're kind of hoping that it didn't work out. So then you can say something like, oh, you know what you're talking about. But I give two shits what you think because I know in the long term, this is what the market's communicating. But it's good that it worked out because that point gets driven home a bit more. You know what I mean? So that's just what I'm saying is that communication. Like stop limiting, stop putting floaties on your chart work all the time. Like that's why I was trying to look for that interview with Epstein where he said like on Wall Street, like most of these people just like feel the market. They're just really good at what they do. Right? Whilst some of y'all are still watching the same freaking videos over and over and over again, thinking that you're not profitable because you haven't watched enough TJR trading, for example, right? So you gotta keep watching all these videos. Risk management explained, TJR's 2026 strategy, daily bias explained, SMT divergence, equilibrium. You're like, man, I'm not learning enough. New episode, awesome. Advanced imbalance concepts. Today I'm gonna learn FVGs, equilibrium. Every day you're gonna learn. But you know, the reality is, and what Wall Street doesn't want you to know, and what you're not gonna hear anywhere else, is you can't even have a YouTube channel as a trader so much because these videos, they're only gonna make these videos because they gotta make videos, right? But in reality, if he was gonna make a video, he wouldn't have so many videos all talking about the same thing because it's already oversaturated. Like how many FVG videos are you gonna find on YouTube, for example? All right, so at some point it just turns into a business, and that's where you gotta unfuck your mind because a lot of you still got your minds too wrapped up in the idea that a new video might be the one. This gonna be the new video that I'm gonna fully grasp this concept, but that's not it. Like, look at these videos, 9:30 every day. Hey, what's back? Nice to see you back. Liquidity explained. Like, how many liquidity videos can you watch? You know what I mean? How many of these videos have you watched already? And it's always the same kind of thing being explained. But that's why we're not doing this. We're doing context now. So the videos coming in the future, yeah, we'll do a bit of like, we'll definitely relate it back to the charts 100%, but we're gonna focus more on building that context muscle. And I think we're gonna do that whenever we have macro fundamentals in play, so we can understand the same language that I'm just trying to explain, like happened right over here. You see how I've explained this? This is a day trading understanding of how I understand markets move, day trading. This is hard to teach. But if I can relate this to macro volume, and then you see that play out on the HTF, I feel like that communication for a lot more people is gonna hit home a little bit stronger. Just the same way as we're saying, like, you know, Goldie here on that Friday candle is just like pricing in the smart money getting in over here with everything that's happening with US, Iran, and the tariffs, and then you see it kind of move up a bit slower. I think then you gotta see that how that the market actually has a communication, right? But then you're only gonna get better at understanding that communication now from the higher to the lower, because this happens a bit on a different level. But I think it's gonna be pretty awesome. We got this, chat. We got this. Trust me. Like I'm actually trying to help you guys. I'm not just trying to come on here to become the next TGR. You know, so like hopefully in the end, you get to a much higher level. If I want to become TJR, man, I just go on Fiverr. I pay a guy on Fiverr to edit my videos, make it look nice, put a little bit more effort in, and all of that stuff, and then teach you liquidity grabs today, this week. Next week, I'll teach you the next trending thing, order block. The week after that, I'll teach you support resistance. You can just do that. It will get views probably, you know, but it's not going to get you to where you need to be. Yeah, we gotta throw people in the pool now with no floaties. No floaties. But that's why we got labeled charts, so it's quite important. So on the WAP database, remember like a focus on the labeled charts section, because if you're still also new to trading, just watching the videos will be a bit confusing. So that's why you need like a still image and labeled charts, and have those images next to you, or just pick a few of the ones that are the cleanest to you, and then have those setups next to you. Because that's kind of like how you're supposed to be trading, right? When you show up to the market, you should always have your trading plan next to you. So you can always see in the beginning, like if this is the setup that you're seeing on the screen. And then you kind of like make sure. What do you think about Alex G that's turning 100 to 1 million? I think it's just videos. Like those videos get clicks. 100%. They will get clicks. So that's what he does. He's a really good marketer. Because the thing is, like, people are not going to want you to know how simple trading is, right? Like, even me, sometimes I'm reluctant to share things in a very simplified way. But, you know, at the end of the day, I don't think I have anything to lose, because I think it's just discipline. It really just comes down to the individual. Like, that's why famous Wall Street bankers say they can go on the ground, give people a strategy, but they still won't be able to make money with it. You know, it's like the universe is always going to have a way to sieve out the unserious to like the serious one. So even if you give it out for free, like a lot of people are scared to do that. It's the reason I think why my data on social media starts from 2022. I think from that 2021 to 2022 period, I didn't want to give anything away. And I remember my first videos on YouTube were actually like bullshit. I was making bullshit videos because I didn't want to give it away. But with time and with the more data I was getting from understanding the industry, understanding people, when I started my mentorship, I started understanding people a bit better. I started to realize like trading is really just about like, it's not about hiding anything. It's about sharing value, and only the ones who want that value will be able to get to the next level. So it doesn't matter if you disclose everything at once. Because like some people who just kind of do it like a side hobby, or they don't really put much skin in the game, they just, there's a much more better chance they wouldn't get to where they need to go. That's why, you know, freemium, sometimes with freemium, you have to be, with a freemium prescription, you have to be kind of careful to make sure that you're not playing yourself. Right? That's why I kind of shared my story, you guys. Like, for the first course I ever bought was a popular guy. I could download it for free. I was actually on the page to download it on that day. Just Google the guy's name of the course. You can get all Lambo Raoul's courses for free if you want as well. Just Google it. You're going to find it. But then, like, as I was doing that, I was like, man, like, you know, this something just didn't feel right. I just felt like I wasn't really putting myself like in the game the way I needed to be. But then I decided, you know, instead of getting this thing for free, I just got it. I just paid that $300. That was the first course that I ever bought. It was my baptism into the industry. And if you want to know who course that was at the time, you know, I got it from this guy called Daniel Savage, right? So he taught a lot about Fibonacci, support, resistance. Like, he taught me, like, he actually had a good foundation in terms of market structure and understanding supply and demand, support, resistance. Correct? But man, I remember like going through that course like every single day, like having notebooks on it, having notebooks of everything. And to be honest, I would never have done that if I got it for free. If I downloaded it for free, I would have known I could download it for free. I'll probably have been going to Lambo Raul next. Most likely, knowing me, I would have probably skimmed through that quickly and then gone for Lambo Raul, and then gone for the next guy, and then the next guy. Maybe Q Banks, and then I would have gone for the next guy and the next guy and the next guy. But you see, that was a difference. That was a turning point. Because that taught me to take things a bit more slowly, a little more slowly. Some people don't stop. Some people do that and then they go to liquidity platforms. I actually almost went there as well. Liquidity platforms, I remember looking at it one time, but it was not as popular as it is today. Today it's a lot more popular, so it's easy to get in. Before that, it was not too many people using those bubbles. Those bubbles that you see on the screen. Like most of the time in 2020, people were actually reading candlesticks. They were not using bubbles. So I didn't feel too confident to go in there. And it was actually quite expensive at that time. Now it's a lot cheaper as well. And then there was Radio Squawk. I tried getting Radio Squawk as well, which is like live radio of fundamentals. And it's a trap that you can get into. Like if you are trying to just learn instead of just taking it slow. A TV show called Undercover Billionaire showed Bill Stearns and Grant Cardone build $1 million businesses in 90 days starting with just $100. Yeah, I watched that TV show with Grant Cardone, correct? Yeah, it's very nice, like how he can. Also, you watch that TV show where he gets jobs from nothing. He starts from nothing. He sleeps in his car, and he goes to these businesses, and the business people, they can just see Grant Cardone's fucking mentality, you know? Like, I always feel like people know this. They gotta know like how bad that you want it. You know what I mean? Like, people can just sense this. But you know, crazy with Grant Cardone, because he's actually selling his apparently he's selling his jet right now because of the whole crypto situation. Yeah, so he's one of the players who are heavily invested into cryptocurrency, and it's currently coming down right now. Bro's got to sell his jet. But Grant Cardone also got like lots of passive income, which is the goal. Because trading is still earned income, correct? Like everything we do here. Look at this, 60k. We're still hovering above. DXY trying to full up the gap. Cardone is still good. I've known him from distance for 30 years. I only knew him when he made it, to be honest. I started knowing about Grant Cardone, I think, during the same time as the guy for Tai Lopez. During the same time as Tai Lopez. The more you knowledge, the more you Lamborghini. That ad was everywhere. Like on YouTube, when you open random videos, you're all gonna see like Tai Lopez's face. The more you knowledge, the more you Lamborghini. Yeah, it's trying to break up. You see, it already like kind of tested this area over here. It's a lot of heavy lifting, right? The market can feel. It can feel these zones. See these reactions that we're getting? You can feel these zones more often there than in an area such as that below, right over here. As like goes through it a lot more cleanly. But like up here, it's definitely gonna feel the zones. See, it's feeling the pressure, feeling the heat from the sellers. I think you making fun of challenge would help the channel just because how many people are doing it. But that would mess up your real account trading in the buy from order flow, but just pennies. Oh yeah, we saw like a pretty strong push here, but just didn't see any structure from it. Didn't see where it was coming from. Did you trade today? Join late. Yeah, I did. I took like 2 trades today. I'm waiting for a bomber clot later on today. Today's gonna be a bomber clot day for me, or it's going to be a red day. Either one of those two. I'm already down like slightly below 1% on the day. So I'm either gonna end this day with a hopefully 2%. If I end the day with 2%, I think that would be nice. That's my target. 2%. So I also got a lot of heavy lifting to do, because now I'm also at a resistance. But that's why I want to see the market clean up a bit more. I want to see more volume come in, because I think I'll need like 30 pips to do that. This push here was just about shy of 30 pips. So I'm going to need like a setup which can run. Most likely my setup later is going to look something like this. It's going to push up, hit 16, maybe 20, pull down, and then go for the 30. That's most likely how that's going to look. So that's what I am waiting for. And how are we doing that? Removing the floaties. We're just letting price play out. We're seeing the way it's moving. You know, first we knew that it was trying to accumulate here to break above. It did that, but not enough of a follow through yet. Let's try and get through that zone. And then I think it's gonna be pretty good. Pretty good buys later. Been listening while I cook my first meal since Friday. Had food poisoning. Pure bars have been spat today, as usual, but definitely a better mood. When Vic's on, nice to hear that, Woods. Hope you get better. Bro, 2026 is not your year, fam. Like, you've been in the hospital like twice now, and I got food poisoning. What's going on, man? What's going on? It's only February. I want you to make it. Gotta make it through the year, Woods. At this rate, it's gonna be crazy. You know, there's some people who just get sick a lot more easily. Other people, like for me, in a whole year, I can go a whole year without getting ill. Like on average, maybe I get ill like once or twice in a year, and it's just gonna be like a cold or something like that, you know. Made 60 USD profit. Awesome. Very well done. Let's look at DXY. Dollar index. Daily is bearish. It's currently at 0.13%. See what gap are you saying that gotta get filled? Clean range on the left-hand side. It's currently filling this area. It's heading towards resistance. We have a gap right here. I think that's the one. So probably the resistance actually should be, because we got a market open gap. So this is where markets closed. And then the gap opened down here. So technically the resistance should be up here. We've just got a gap. So yeah, that's on its way up right now. That's currently getting filled up. It's quite interesting. Like DXY is kind of moving up. I guess that's more technical anyway. This thing should be predominantly coming down. And that's what we're probably going to see for the rest of the week. DXY bearish and gold moving up bullish. I'm going to try shoot out an update video on the macros today as well. Oh, you see this? What's going on here, chat? Like, look at this. Oh, nice. You close this at the top. Oh, Lee, still holding that thing. Sheesh. Yeah, that's what I'm trying to catch. So I'm going to try to catch later today. Little 3% banger. You see, it's like filling up the range right over here. Boom. You took a buy here. For me, there was no structure. Yeah, I can see it's moving up. It's trying to break through that resistance. Definitely got lots of heavy lifting to do. But you know what's happening on DXY here on the 30 is just what we're looking at on gold here down below this area. Correct? Like this is the way the market speaks. Point A to point B. See this? Point A to point B. Point A to point B. And you know the funny thing is we're gonna do this like every day of this week. The only thing that's you're building is your understanding of the variables on how that can look like. Because you're not learning the point A, point B anymore. Because you know what it is. It's already fairly simple to understand, correct? But you're actually training your ability to spot out the variables and the different ways that forms. You know, because sometimes when they look at things, you're going to overcomplicate to look at it here. Maybe you're going to look at one here. You're going to overcomplicate and maybe not look at the correct ones. But in reality, the key areas were just up here because there was no confirmation here to take the break above. And you possibly were not looking for sells, so you would not have taken this one unless you were looking for sells. Then you could have taken this sell right over here, a little bit of a head and shoulders and liquidity grab, which is right here. That's going to be the head. And then you got the SMA crossover right over here with the break below the lows to distribute to the downside. So that also happened on a minor scale. Everything right here and that distribution to the downside on a minor scale to continue to move back up. And let me show you something else. See something trippy? Look at this. What was this? This was video from Friday. That was the same thing that I explained. There was one setup that happened here. That was that distribution that came into that range. Right? This came into that range. Is the same thing I just explained now. It happened here. Different variations, different day, same setup, same clean range. See that clean range here? Then distribution came in. And then eventually filled out that range towards resistance. See this? Same exact thing that happened right over here. Boom. So simple. So simple, it's so elusive. It's so simple, it's elusive. It's like your brain almost gets it. And then it goes. It's like you're almost at the verge of getting it. You feel like you're right there. But it just keeps eluding. It's like the Matrix doesn't want you to learn something when that usually happens, correct? It's like there's something that is just blocking it. Like an invisible wall, it feels like a force field. Because that's how a lot of traders feel, right? Some of you in the chat must be feeling like that right now. Like you're right there. You can taste it. You're right there. But it just never gets it. Who feels like that right now currently? Write a 1 in the chat if you feel like that. Write a 1 in the chat if you feel like you're right there. You can taste it. You can taste it, but it's just like the markets just feel like elusive. It's just called, you got to do that inner work. There's that inner work as well that needs to be done. You know, like it's good to be spiritual to some degree as well, to understand that inner work needs to be done. You know, whether you're going to read books about like the law of attraction, and I would highly recommend reading The Secret. It's a book about the law of attraction, right? Because sometimes, you know, like frequencies do exist. It is a science as well that's been proven. So it's also about doing that inner work, that if you're going to be feeling like that. W book though, Law of Attraction. I'm gonna be honest, like that book changed my life. That's the one book that I'm not much of a reader, but that's like one of the only book that I ever read that I can remember had a lasting effect on me. You know, it's a really good book. Or you can watch the documentary as well. It's the next range to fill, by the way. If you're looking to fill this area, here is about 42 pips, 43 pips. Gotta believe, you know, like Conor McGregor also says, if you can see it in here, or what is it? If you have the courage enough to speak it, and you can see it in here, then you can achieve it.
Thursday about his right hand.
Yeah.
Can I tell you what you told me? Word for word. You said, I felt when we stared down, I felt his right hand was twitching, which was a subtle tell for me. He is ready to unload that right hand, and I feel that could be a downfall for him. If he lets that right hand go, I will not be there. I simply enter the way I enter, and that is enough. They either overextend or they shrink away, but either way, it is not good for them. I will create traps and dead space inside that octagon, and I will walk him into that dead space, but all of a sudden, he will be in danger. How do you do that? How do you predict these?
If you can see it here and you have the courage enough to speak it, it will happen. So I see these shots, I see these sequences, and I don't shy away from them.
And that's it, sequences. You know, if you look at the way God made Earth, everything happens in a sequence. You know, if you look at a queue, if people are going to be lining up in a queue, it happens in sequence. Like everybody's going to have their turn. Everything doesn't happen all at once. So the key is you gotta stay on the queue. You gotta stay on the queue until it's your turn, correct? Because life moves in sequences. Your time and another person's time is not gonna happen at the same time. Another person's time and your time is not gonna happen at the same time. But the important thing is you stay on the queue and you will get served, correct?
A lot of times people believe in certain things, but they keep to themselves. They don't put it out there. If you truly believe in it, if you become vocal with it, you are creating that law of attraction and it will become reality.
Simple. Sequences. Everything is all about sequences. Every day is just an opportunity to get 1% better. So today, I think today, in hindsight, the only thing that I could have done to get 100% win rate was to do exactly what it is that I'm doing right now, which is to sit on my hands. Because today, unfortunately, I was dealt a Judas card by this freaking candle over here that closed with a wick, but it didn't have that wick in real time. You see, now the wick disappeared. There was no wick over there. So that means there was no entry confirmation. If there was a wick, that means our entry would have come at the break of these highs. Right over here. Because then there would be a wick. You see this? Then there would be that wick. But today I was given an impossible hand that I had no control over. So the next best thing that I could do was just like, you know, paper trade, watch the other trades play out, and then come again according to the system and my time to trade. That's the only thing that I could have done differently or done. Because we don't want to fight the market. Even if it's still playing out over here, you know, like awesome, but we don't want to fight the market. That's the last thing that we want to do. Look at this liquidity grab. It just took out some people up here. Did that candle even close above resistance? Yeah, it did. It took out some people. It's washing people right now. Wow, man, that's so aggressive. Holy. Man, look at the size of this 1 minute candle. It just dumped like 60 pips. Sheesh. Whips. What a whip. Yeah, just small discipline. Damn, Daniel. How much that push anyway? That was only about like 12 pips. Damn, Daniel. So many whips. The Wisdom of Your Cells, How Your Beliefs Control Your Biology by Dr. Bruce Lipton. Oh, nice. He's got Bruce Lee's name in Lipton tea. This guy must be very zenful. You must be like water, my friend. And then put the Lipton tea in the water and drink it. Bruce H. Lipton. Talks about scientifically, his lectures are all over YouTube. Nice. Yeah, you got it. That's really good. There's a really old movie that explains the quantum physics of law of attraction. What the bleep do we know? What the bleep do we know? 2004. But you gotta be very careful when you go into that realm. There are these kinds of people who take it too far. Like, I remember this one lady when I was kind of getting into it. You know, I was kind of getting into this whole thing. Her name is Teal Swan, and she's borderline cult. They're like 2 million followers over here. There's some times when you get too far into it.
Hello there.
You forget that, you know, it's not about wishful thinking. It's about actually putting in the work as well. But there's some individuals like this who are quite dangerous, who use that to pull wool over your eyes and think you're gonna manifest a Lamborghini by sitting on your couch, or, you know, just manifest things just by thinking about them and no real application, right? So, you know, we can see through these things. We've seen through the matrix. We can see through the matrix. Like, we can see this is all bullshit here. But it's good. It's good, but just obviously you gotta put the work in. You gotta have some kind of a structure and vision that you're heading towards. Correct? Like, it's good to know. And that's all that you need to know, is that every day your vision has to be in line with the life and reality you want to build. And you have to take actions that are going to be in line with that life and reality that you want to build. And that's it. You don't need to keep learning, right? Because now people are going to fall into that whole idea that they're going to keep learning about manifestation. But you don't keep learning about manifestation. Same way, like, you got like a strategy. You know what is you're looking for. You don't keep learning necessarily about it. Now you just have to apply. Apply. And also that's going to be in different contexts. You know, you're going to manifest when you're feeling good. You can manifest a gym session when you feel good, right? What about like when you don't feel good? Then the context changes. Are you still going to be able to manifest that reality of yourself who actually went to the gym? Because now the context and the price has kind of changed that you're willing to pay. And every day the price changes. Are you willing to pay that price every day? That's going to be the cost of your dreams. Every day the price is going to change. Gotta see through the matrix. When you don't want to do it, that's when it actually counts. Yes, exactly. You see, just when you don't want to do it, that's when it actually counts. Even think about it this way. Like when you're at the gym and you're on your 1 to 2 reps to failure, when you don't want to do it, that's when it actually freaking counts, man. That's when you build out muscle right there. Like right when you don't want to do it, you have to do it. Because, you know, like getting to the set, it's a lot easier, for example, that a actually I hadn't gymmed in about 2 weeks like properly. I've just been hitting the gym like once a week in the past 2 weeks. So it's quite weak, right? So usually I hit about 16 pips, but since I was a bit weak, I only managed to do like 15 pips. But you see, it's easier in the beginning. This is like, okay, this is light work. This is light work. It's only when you don't want to do it. You see, this is when we're coming to where we don't want to do it. Then this is that last push. Man, that's when it counts. That last push there, this is where that muscle is built. Right there, bruh. Right there. That's what you're aiming for at the end. Right there, right in the end. 1-2 reps. You know, don't get too comfortable with this, man. With this, you're going to waste your time. You know? That's all that you got to do. You just got to waste your time. But you got to build that up. You know, that's why momentum is important. Especially when you're learning something. You have to keep the momentum on, because this is like that break-even phase. You see, just when you feel like quitting, right when you feel like quitting, you have to push through that last bit, because that's where it all counts, right? Let's see. There's a TFX on that trade. Just the grabs of liquidity and order flow. That's why I used really small lot size. This trade, I was 2 pips from closing. See, Nas was not able to enter. Something happened on Nas. Oh, let's see. Yeah, Goldie is also acting a bit volatile there. See what Nas is doing. Oh, Nas got a clean range to fill. Oh, Nas is also down 0.43%. You see, Nas is down. DXY is consolidating on the daily. There's no direction. Nas is a somewhat, I think there's a gap. Yeah, there must be a daily gap here. But Nas is down 0.44%. And it's trying to break beyond this level. It's trying to mop up some of this range on the left-hand side currently. Like 60 pips left to come down towards support. Feeling a bit of that range. I think that was a breakout. Small little distribution at the break of the lows. Right over here. When we see that distribution kick in, you see that those market participants come into the market and push like about 28 pips. And Goldie is still a bit volatile. It's kind of like fluctuating a little bit. A few swings here and there. Yeah, something about Goldie feels a bit off today. Like there's definitely like opportunities, but you can sense a bit of what we're even seeing here on TradingView is whiplash. Big core strength. Yes, sir. Yes, sir. I think if you can do like 15 pull-ups, that's pretty good. Most people are going to be able to do 15 pull-ups. Even like the much heavier people. Usually like 15 is a good number to get to. Yeah, I call them pips. After 15 pips, I think it's how many more? How do we do? 15, 10, 8. Then I'm happy to get to 7, 8 for the fourth set. Put a board on the floor and you can walk across. Put the same board 100 feet in the air and you likely fall. The difference between knowing and hoping is manifestation. Yeah, and we do these things because we want to always push our ourselves. Like if you, it would even exactly what you just said, watch this movie. It's called The Walk, right? So it's pretty based on a true story. This guy puts a line across these two massive buildings in New York. Amazing actor as well. Just forgot his name. And the whole time he was just training to make this walk. Based on a true story. Really good movie this is. See, because you're gonna do that. You're gonna do that on the ground. You're gonna do it on the ground without a problem. But when you got this expectation, then it changes the game. Right? It changes the game. So this is equivalent to you doing a funded program as a trader who's just learning to trade. You're just putting yourself like in a level like this where it's like, man, you're gonna fall, especially with all these additional variables. Like you see variables such as the wind up there is probably a lot more higher. There's a lot more distractions like birds as well. So you putting yourself in a position which you're just making it harder for yourself for no reason, you know, rather than just starting on the ground and then mastering that on the ground and then attempting it when you're already like on a much higher scale. Because you see, when he's at this point as well, if you even like watch the movie, he's done all the groundwork, correct? So he's already practiced enough to do this. So he's ready to do this now. So when it comes to doing it, it's not time for second guessing. You know, you have to be already have done your back testing. So all the back testing is done. So when you're forward testing, this is not the time to be back testing. You know, it's time to move forward. Correct? This is not the time to second guess yourself, to think whether you're going to change something different. No, you've already done all that. So now you're ready now for like, you know, funded program and all of those things. Then you got to do it. I think psychology and understanding like psychology is honestly people say psychology is overrated in trading, correct? But I think it is the make or break for a lot of people. It's not about who can watch an ICT video better. It's just about like who, for example, is gonna like perceive the context of it better. We got resistance here. We have a 51.56 break above resistance. Got about like, you know, 31 pips. Still kind of setting up here. It's whiplashy, as you can see. It's like breaking highs, breaking and then pulling down, breaking, pulling down. It's kind of like trickling as it's trying to get through that resistance. You see, it's a lot of heavy lifting. You also see the way it's behaving right over here because you got resistance as opposed to the way it behaved down over here. You see, sometimes it can just go through it smoothly, but you know, trading is a probabilities thing. It's not about me being right or wrong in each scenario. It's about what's the probability of price moving smooth through a level where you have resistance. There's a higher probability it's going to trickle through that level until it can break through. Right? It's like when you're flying and then your cloud is in cloudy conditions, right? The plane's gonna shake, shake, shake until the plane can break through. Yeah, I think my internet went off for a second there. But until it breaks through, and then it's gonna move like a lot smoother. Like this. Boom. Boom. So just wait for it. It needs to break through above, I think, at least a 51, 55, and then it can move smoother up. Yeah. Is my internet good? It should be good. We should be okay. What's that? My by 8, my biceps already burning. Pull-ups are fun because I feel like most people, I don't know, for some reason, like the pull-up machine in the gym is never used. Most people don't use the pull-ups. But that's honestly the best workout that you're gonna do there. Pull-ups pretty nice. Because they're hard to do in the beginning. You know, when you start, maybe you're gonna do like a set, your first set's gonna be like maybe five. But you know, the thing is, like, if you're gymming, I would recommend you do pull-ups because the strength gains you get from pull-ups actually motivate you. You know, like when you're taking creatine and doing it consistently, being able to push from 5 to 8 to 10, you kind of look at yourself and like, damn, man, like 5 felt so difficult, but now it's like easier to do 10. And then you just keep pushing and keep getting better. So those strength gains actually motivate you a lot. Woods here was able to do what, 10 with one hand? Sheesh. Wait, when I was 21, I got pretty strong. I used to do 10 pull-ups on each hand. Yeah, pretty nice, man. Look at this. Nice start to break. If it starts to break 51, 55, we're going to see another attempt at a distribution above that high. See if like price can keep moving up there. But yeah, watch out for more buys today, chat. I'll try drop a macro video later on today. We'll just kind of see like what's happening with Trump and the whole situation and where gold is most likely heading for the week up ahead. And for right now, I would say look at this range, especially get any confirmations here. There's a potential that price could run and fill this range. About like a 31 pip range, correct? So we're just waiting on that clean distribution. I believe like a really strong and clean push is going to come out soon. Or at least I expect to come out of this area here soon. So watch out for that. It's currently cooking right now. It is at a point A. So just keep your eyes out for buys on gold. We're still bullish, about 1.07% on the daily. And I will see you all tomorrow. Adios, everybody.